We are nearing the end of March, and with that comes some significant financial changes. Let's bring in our expert, Michelle Maynard. Hi, Michelle.
Afternoon, Mun.
Firstly, the aged pension is going up at the end of the month.
It is on the 20th of March. Now, a lot of people on different pensions are getting an increase, but unfortunately for our aged pensioners, it's not going to be enough to get them a takeaway coffee each week. $8.40 a fortnight for singles, $12.60 a fortnight for couples is the increase that they're getting. The government says it's going to help them with the cost of living. Our advocacy groups are saying it's definitely not enough and the government needs to do more. Normally our pensions go up twice a year, but our age pensions haven't had an increase in the last 12 months. So it is something, but I think a lot of people are going to be asking for a lot more.
The Fringe Benefits Tax that year also ends on March 31. What should we be aware of there?
Yeah, unlike the income tax year, which ends on the 30th of June, the Fringe Benefits Tax year ends on the 31st of March. Most people don't know what this is. It's for our employers who give our employees something other than wages and salary. So that could be a car that they could use privately, or a low interest loan, or even your Christmas party and end of financial year party may be subject to Fringe Benefits Tax. Now, out of all the taxes I deal with on a daily basis, this is the most complex and the one that small business doesn't understand. Our industry groups have asked the government to abolish it, saying it has low revenue, high compliance, but they're not listening. So if you're an employer who provides an extra benefit to your employee, you have until the 21st of May to lodge your Fringe Benefits Tax return.
Is there anything, though, that employees have to be aware of there?
No, they don't pay any tax as an employee, but it does get taken into account when you're assessing things for like Medicare levy surcharge or your government payments. So it doesn't get taxed to you as an employee, but it does get taken into account in the terms of income that you earn.
Okay. Finally, Michelle, health insurance premiums, they're on the rise. Now, for most insurers, it's the second hike in 6 months.
The second, and we do say that and it does sound bad. However, the increase that was meant to happen in April last year was pushed back 6 months to October, so we probably should give our private health insurers something for that. An average 2.74% increase for our private health insurance, which is about $59 per year for an individual or $127 per year for a family. As you said, the second increase in 6 months, but it is the lowest increase in 20 years. Interesting statistic, after the 2019 increase, we saw a lot of people dump their private health insurance. But since October, there's been about 100,000 people who have taken up private health insurance. And they think that's because people are worried about elective surgery pauses and how that's going to blow out. So people aren't worried about the price increase it looks like. However, if you are, there are a couple of things that you can do. You can contact your private health insurer and pay your premium in full before the 1st of April. That will lock in the current pricing. You can maybe change your policy and drop some things that you don't need. That will bring it down. Or like with everything, if your current provider is not working for you, shop around and take your current existing waiting period somewhere else and get a better deal.
And be aware of what you have paid for. Michelle, as usual, appreciate the insight. Thank you.
Thanks, Monica.